Tuesday, January 30th. Market analysis, Stan Ehrlich. I always start out with the stock market indexes, go to futures contracts, 23 of them, and then sometimes forex or crypto or cycles or sectors, maybe some other stuff. But here's the March E-mini. Every morning I start out with it. Now, you know that it's been overbought. Now, remember, my overbought subgraph indicator is a custom RSI, learned myself from Wells Wilder in the late 70s, 80s, and so on. So it doesn't look like RSI, but it is. And I use it, and it's available for you. I use it for my RSI indicator levels. I like not 70, but 75 for overbought. And we did and are overbought now for 1, 2, 3, 4, 5, 6, today being the 6th day, making it a candidate for an ER sell signal, like what we had way over here on July 27th of 23, which ended up being the top of the market at the time. I've developed this trading signal system, automated trading system, to pick major tops and bottoms, which it does, but it doesn't pick every one of them. And it does have false signals. But we keep our risk factor very handleable and try to let our profits run for really big trades sometimes. And they're going to take a week or two or a month or two, and maybe even more. But we have a version that is also for scalpers that trades on the day of the green and red. So even if the green or red signal on a particular day doesn't look like it was going to or did make money, if you had held on for a position trade, it very well, very often could have made very good money on the scalp version. Okay, enough said. We do have a higher high today in some important indexes, and they are overbought, meaning if, and it's kind of a stretch, can we get below yesterday's low? Well, it's not very close. But if it does, we will have a whopper of a red ER sell signal. So I do expect the market to start to come down because of the overbought condition. I am looking for, but I don't have it yet, a bearish engulfing sell signal, kind of like the one that didn't work very well on December 20th, just last month, about a month ago. So it did make money for the scalps, I'll tell you that, but the position trades did not. So I need to get below yesterday's low in order to get a signal. Waiting. Let's see what happens. Next chart, Spider. Exact same story as you might expect, but their trading hours are different, remember? So we did get above yesterday's high. That's good. Yesterday's high being 491.42 and today 91.48. Now that's only 6 ticks, but 1 tick does the job. A higher high by 1 tick or more is a higher high. Okay, there's no iffy here. There's no gray area. It's either black or white. Now, hanging on to a very small loss at the moment. Next chart. Down 30 cents only on the 1-minute S&P Spider. You can see it's opened, rallied to the highs. That was yesterday. This morning opened around unchanged to a little bit lower. No damage done. Rallied to a minor new high a couple hours ago. 8 ticks worth, 6 ticks worth, whatever. And then it made a new low after that. That's interesting. So momentarily, we've got a rally going. I need to have this turnaround dramatically and come all the way down to below 478.16, give or take a tick or so. And that is not a small move. That's down 4 points from where we are. A total of a 4 1/4 lower for the day. So again, it doesn't look particularly likely, but I'm still expecting a move down to support the highs made in December and early January, and maybe a little lower. Next chart. DIA is also, as of yesterday, overbought. and overbought again today. So it's a prime candidate for a bearish engulfing ER sell signal also, but it's very firm at the moment. This is now near the high of the day at the moment, and up $1 or a full point, 99 ticks on the DIA this split second. So now up 101. So it's got even a farther distance down to go to get below yesterday's low. Next chart is the Russell 2000. Not the same story. We had new highs for about a year, got overbought, and everything fell apart right away. And it came all the way down to support, got oversold. Then it started a rally, no surprise. On the way up, we left a little gap behind. So on the retracement, I'm expecting across the board in all of the indexes, I think the Russell is going to come down at least to close that gap. And that's just a little bit below the lows of the last week or so. So maybe it'll even come down to the lows of January 17th. Next chart, Qs. Basically the same story across the board, except the Qs have not made a new high for the last 5 days. And it's pretty close to getting into new low ground for the previous 4 days. Unfortunately, it never got above yesterday's high. So I'm not going to have a bearish engulfing, just a little minor downside breakout, which is okay, but I'm not going to get a signal out of it. Gap to close, back at support, 413.5, very possibly coming down to 408. And I can't rule out a little further down to a couple other support areas. None of these dips I'm expecting are a big deal. They may take a few days to a week or two. And I think it's going to be a very good buying opportunity, again, for another rally into new historic highs. I am not bearish. I am short-term reactionary or short-term expecting a dip. Next chart. NASDAQ futures, March futures, have a higher high today than yesterday. So in an overbought condition, we do have the possibility of a red bearish engulfing if today, before the close or on the close, whatever, it gets below yesterday's low. That would make me happy, because that would tell me that the correction I'm looking for and haven't gotten yet has started. Probably, maybe, I hope. Next chart. 1 minute DIA, still firm, right near the highs. Let's go to futures. Now, these are my 23 charts. They're all continuation contract or perpetuals. And we start with the E-mini from a little bit different perspective, but it's the same chart. And we could have a bearish engulfing if it will nosedive, which does not seem very likely because it's got 4 points down to go. Yeah, maybe even more, actually more on the E-mini. What about the NASDAQ futures continuation contract? Same story, could have a bearish engulfing. It's already down a lot more, so it's halfway there, but it's got a chunk to go still. Next, we got bonds. Now, bonds have been firm for a couple, 3 days. Minor rally. Not anywhere near overbought or oversold. So that doesn't help us. In a little bit of a bear trend, did hit support, and it is bouncing. So are we going to continue to work our way higher? And that's going to cause probably the other stock market index is working higher on the average. Also, I don't think that's going to happen. I think bonds are going to slip back to support again around 118, 19, and then maybe double bottom out in support. And then everything starts to go higher, maybe a week, 2 from now. So I don't really want to see or expect to see more strength in the next few days in bonds. I'd rather it at least go sideways to a little bit lower and bottom out and then go higher. I am long-term bullish on interest rate futures, period. I am looking for a little correction just like the other indexes. 10-year notes, same story. Currently minor amount lower on the day. A little reversal of probably no particular consequence might happen. A bearish engulfing candlestick, but not a ER sell signal. And test support again. Next, crude. Overbought, starting to slip yesterday, bouncing back a little bit today. we're between a rock and a hard spot, or the hard spot and a rock. I don't know which is which. It doesn't matter. And the resistance area could stop this rally, and or the support area could stop the next dip, which I completely think is likely. So no real strong opinion here. By the way, we got a brand new signal in soybeans today. Show it to you in a minute. And watch the cotton and the cocoa. They're brand new last week and this beginning of this week also. 3 brand new ones. Only a couple, 3 days old, or today. Beans. Natural gas chart, maybe a double bottom, kind of close to oversold. Bear trend, obviously. What's the bigger picture? Big sideways, lots of nothing. Broke out to the downside big time November, December. Came back right back up to the major resistance area, just fine and dandy. Stopped cold turkey. Overbought conditions. Came down in the process. Bearish engulfing ER sell signal worked great for a couple of days. Good money. Bounced a little bit, and now we're about to, it looks like, make new lows again. This is not just new lows for a week or two. I think we're going to challenge the lows in December and keep on coming down even more. Next, heating oil. Overbought, starting to slip a little bit yesterday, and again today a little bit more. That could have been it. This could be the high before we start to see new lows. So I'm expecting to see more weakness. Not real convinced about it, but the conditions are right. I'd just like to see a little bit more downside here. Next, gold. Rally high. Most of today is above this neckline. Now, it's about time I abandon the idea about this head and shoulder top, because it just is not doing what it's supposed to do. I claimed 2 weeks ago, when it broke out on January 17th below the neckline, that was exactly what it should do, point blank. It's not supposed to go back up above the neckline, let alone close above the neckline, which it did the next couple of days. And it toyed above the neckline for 3 or 4 days. That's a no-no. Now it broke out again, but in the last 3 days, it came right back up above the neckline again. This is just not acting like a head and shoulder top formation. So I am abandoning the markers that I had used, and we don't have a head and shoulder top. We do have, obviously, ER sell signals on the top, a huge one on the top. On the bottom, when I mean top and bottom, I mean the exact high day or so close it doesn't matter. That's a bad signal. That's not red, it's green. That's buy, green, good, perfect. Red, perfect. Green, premature. Small rally on green, that was all right. Green on the bottom, perfect. Red on the top, perfect, et cetera, green on the bottom. Last year was great for both gold, and here comes, after I comment about gold, I think we're trying to top out, but it's not the head and shoulder. So I got to wait for some signals and or breakouts or something else to work with. So I'm not real sure about gold, but I'm favoring the bearish side a little bit. Silver. Sell signal on top. On top. Buy on the bottom. Sell on the top. Buy on the bottom. Sell on the exact high of a double top with both signals, tops being ER sell signals. Unbelievable. That's just great. That does not happen very often. On the bottom, green. Again, last year was a great year for precious metals for my signals. Next comment about silver. Pretty much the same as gold. A lot of resistance where it's gotten up to. The RSI doesn't help very much at the moment. I think I'm neutral to turning bearish slightly. Next, platinum. Same camp. It did bounce off of support, but the longer term trend is from some major tops down to a big sideways. And then support so far has been holding off and on fairly well, not perfect. And the bias I've got is neutral to bearish. Next, high-grade copper. Coming up to that trend line again. Getting very close to overbought. Good combination for it to stop and turn down. This time, the trend line is below the resistance area. So I may go through the trend line to resistance, or it's not going to make it to resistance and stop at the trend line. But right in here, between 39,619 and about 39.28 is where I think it's going to stop and turn down. Next, today in soybeans, we have a new bullish engulfing buy signal now, developing today. Brand new. We're going to see where this carries us. A lot of people like to trade beans. We have the trigger for the next few days for ER3 possibilities. We are long at 12.12, give or take a penny. And the market is trading at 12.5 right now, smack dab at the price for long, ER1. We've got oversold conditions. We've got a lower low. We've got the higher high than yesterday. And currently it's higher than yesterday's close. That does the trick. That's it. Green, bullish ER buy signal. It only at this point has to stay above the previous close, and that is way above the previous close right now, 18.25 cents worth. So it's unlikely it would come all the way down and kill a signal today. So I'm pretty darn sure we're going to end up with a bullish engulfing and an ER buy signal today in soybeans, January 30th. How high? Well, the first objective would be 1248, the high a few days ago. The real objective is probably going to be about 1290, a significant resistance area. But one problem, we're getting a buy signal in a bear trend. A little bit of a problem because I can't tell you this is the beginning of a big bull move. Probably only a rally in a longer term bear market. Exactly what this buy signal did. Now it was good. It lasted a couple of months and carried up pretty far. Maybe this one will do about the same. Would not be surprised. But the important part is today is a buy signal in beans. My stop at the moment, and it's going to be going up pretty quickly, is 11.88. So I'm risking about 30 cents at this particular point. Next, bean oil. Oversold, lower low. If we get above yesterday's high, which does not look particularly likely, but if we can, it'll turn green and be a buy signal also. So I am now, because of oversold only, expecting a little bit of a rally. Probably up to 46.7, maybe 47. And I can't rule out 49.75 resistance. We did catch and have a fantastic trade on our previous head and shoulder top formation, which had, and my lines have moved, and I don't like that. TradeStation is moving them automatically, and it shouldn't do that. Head and shoulder top, shoulder, first shoulder, July 5. We have a double top, which ends up being the formation for the head of the other formation, the head and shoulders. You can have formations inside of formations. They're not all that rare, but not super common. So the double top was the head of the head and shoulder top. The last shoulder was a bad buy signal. It should have been a sell signal, but that's not what happened on September 15th. The formation's good. The neckline's good. The way it broke out is almost perfect, almost textbook, pretty close. And down we went to the minimum downside objective, which I detailed a month or more before it happened. Bounced. Now the bear trend continues. And what are we looking for now? A little rally in a bear trend? Yeah, that's about it. Again, next week or two up to 48.5-ish. Next chart. Meal. Bean meal. Trend line sort of held. Didn't quite get to oversold, but super close. Rally, for one day, okay, no big deal. I don't think it's going to go very far, last any length of time, and turn right back down to make it below yesterday's low, especially in a closing basis. Come down to support at 335 and maybe even break below that level. Next, corn. We are close, very close, to having a bullish engulfing ER green buy signal. All corn has to do today is get above 447.5. We're currently at 45.5. 2 pennies and a tick is all it needs. Just went up a tick, down a tick. And the high already has been 447. So I need 447.75 or 5/8, whatever, to do the trick. A tick above yesterday's high. Again, yesterday's high, 447.5. It is very, very close. And it might do it before the day is over, and you'll see a green bar tomorrow and a buy signal having happened after I'm finished with this YouTube. So watch very closely corn. Remember, we got a buy signal in beans already. Next, wheat. Bullish engulfing, yes, already has one, but it didn't turn green because it wasn't oversold. Otherwise, it would be green, like soybeans, like corn just might do any minute. So can't have a bullish engulfing green ER buy signal because of the fact that we weren't quite oversold. Too bad. I expect a rally here, probably up to about 643, and maybe even a little higher, 676 maybe, in the next week or two. But the problem again is it's a long-term bear market. So probably the lower upside objective at 641.23 is more likely than not going to stop the rally, turn down, make new lows for the whole trend. Next, live cattle in resistance and overbought. Looks like it's having some trouble exactly where it should. We now are a little higher on the day at the moment, but it's the 4th day in a row that we're overbought at resistance. With a little bit of a blow-off type top of appearance, I think we're about to start going down. If we close right here, it'll be barely a new high close and only one day after the highest high, so it does not look like it's about to go down to most people. But because of the situation, overbought and resistance, I have to say, I think it's quite possible. You might see it just turn right back down here. We'll see what happens. That's cattle. Hogs, Miss Piggy, did not turn down. I would have said yesterday and the day before about the same thing. Overbought and resistance. This didn't pay any attention. In fact, it's now a new high since late September. Still overbought. That's the problem. Resistance or no resistance, I can't help it. Overbought means overbought, and it's likely to cause the market to move back down some. But now we have a little support below the market. So we'll see how it handles that when it turns down. And that's in the 84.40 down to 83.14 area, the red zone here. Next chart. OJ. Kind of the same commentary. Overbought for a 2nd day in a row, around a resistance area, closed an old small gap finally that happened on December 2021. And it's approaching a little bit of resistance, not quite yet, but super close. Overriding feature, overbought, probably can't maintain this for very long. Of course, I said exactly that way over here when it lasted a month. And then finally, at a whopper of a bear signal, we caught that. We made very good money on this new short sale. Obviously, went straight down to oversold. The very top of the market is my ER sell signals. And the last shoulder high and a head and shoulder top, which did act very normal, was a bearish engulfing on not a bearish ER sell signal because it wasn't overbought, but a bearish engulfing, which I like, part of my signals. And it worked. So pattern came true all over, got down to where it should have. Now we've got a rally for a couple of weeks and it's overbought again. I think it's about to turn down. And I don't think the support levels are going to hold. Next. Cocoa. Oh my, did we get stopped out? I think we did. My stop is 48.41. Today's high is 48.43. Well, this happens sometimes. We got short yesterday at the red dot, which was 47.23, and almost the exact high of the day at this point. We are stopped out of our ER3 trade. ER1 scalp should have made a little money, no question about it. ER1 overnight probably lost a little. ER3 scalp probably was a small loss. And the ER3 overnight was a loser. Stopped out today, right around the high. Bummer. It might make new highs again, but this looks like it's trying to form a double top over a 4-day period, 4, 5, 6-day period. I'll have to keep in mind that possibility. I might get another sell signal. We're overbought now again. Next, is this head and shoulder top in coffee, which I've been talking about for a few days, still legitimate? Well, maybe. Today we've got another higher high for the last shoulder. If it is a last shoulder, it's beginning to look not so good. We, of course, have a neckline. That's not going to change unless the pattern completely gets obliterated, and that means more rally or more sideways movement. But if we suddenly turn straight back down again, I have to think this is a lopsided head and shoulder top. So I'm not going to erase the markings yet, but I'm close to doing that, eliminating this. So I'm going to stretch it out a little bit and raise it up a little bit. Okay, next. Sugar. Resistance stopped the rally in overbought conditions. Classic. We dropped for a couple of days. Now starting to bounce a little bit, but back to resistance. I am expecting another new low below today's low very soon, probably this week. And my downside possibilities are down into the same lows we had before, low 20s, probably below 22. Next. Cotton. 2 days ago on Friday, we have a new short sale signal. ER1 scalp did great, good money. ER1 overnight is still a very small profit. ER3 got short yesterday at the red dot. So ER3 scalp made good money. ER3 overnight is still a small profit, but small, very small. All the trades probably did very well. Both ER1 scalping overnight and ER3 at the moment scalping overnight. Probably the stop has already started to move down. My yellow dots are not moving because I'm not showing you the exact strategy and the lines affiliated with the execution of the strategy. I'm giving you what I expect to be the true results from watching the way it's moving. So far, so decently in cotton. Now we're going right back to the E-mini, which is still now just a little bit lower on the day, 60 cents. Remember, this has got to go down like 4.5 points to get below yesterday's low, and that does not seem particularly likely. You guys have a great day. See you tomorrow. Thank you. Signing off.